Come see us on tour in Los Angeles, Honolulu, Dallas, Texas, Baltimore, Atlantic City, Cohoes, New York, and Providence, Rhode Island. Go to jimmydore.com for a link for tickets, and only there. So Trump said this when he was asked about Bitcoin. He was asked whether the U.S. will create a Bitcoin strategic reserve similar to its oil reserve. He said, yes, I think so. And that was in July. Then Republican candidate Trump promised to create a strategic national Bitcoin reserve and predicted Bitcoin could eclipse gold's $16 trillion market capitalization during an appearance at the Bitcoin 2024 conference. If Donald Trump is, this is from Forbes, if Donald Trump is successful in putting forth a lot of the proposals that he proposed to the community, the sky's the limit because Bitcoin has a fixed supply, said the founder of a crypto trade association. The stock to flow model says it's going to be at over 800,000 by the end of the next year, which would give Bitcoin a market capitalization of around 15 trillion, up from 2 trillion currently. Well, son of a gun, Trump confirmed Bitcoin reserve plans up to 15 trillion and the price boom predicted. So this was December 14th. Trump confirms Bitcoin reserve plans. It booms to 15 trillion boom predicted. And then the Fed's biggest nightmare is suddenly coming true as Bitcoin price surges. And that's from December 18th. So 4 days later. And they say Bitcoin has suddenly skyrocketed higher, passing its previous all-time and climbing to over $106,000 as incoming President Donald Trump confirms his plan for a Bitcoin game changer. The Bitcoin price has more than doubled since dropping it to August lows, helped by Tesla billionaire Elon Musk fanning flames of doubt over the future of the U.S. dollar. Now, as a leak reveals Russia could be poised to beat the United States to a Bitcoin reserve, the Federal Reserve has been warned its biggest nightmare could come true in 2025. We believe stagflation is coming in 2025, the Fed's biggest nightmare, said an analyst with the Kobesi letter posted on Twitter, referring to a combination of economic stagnation and soaring inflation. Kobesi analysts pointed to a report from asset management giant Apollo, which predicted a rebound in inflation in 2025 and not a softening to justify Fed interest rate cuts. The probability is rising that the Fed may have to raise interest rates in 2025, Apollo's chief economist wrote in the report, asking, will we see a repeat of the 1970s with the Fed easing policy too quickly, triggering a rise in inflation in 2025? Last week, the influential billionaire investor Ray Dalio warned of a looming debt crisis, which he expects will trigger a sharp decline in the value of the U.S. dollar. And son of a gun, stark Fed wake-up call triggers a 500 billion Bitcoin and crypto price rout. So it went way down. Bitcoin fell sharply. And this was just, so 2 days later, Bitcoin fell sharply, dropping along with stock markets after the Fed Reserve warned inflation remained sticky and BlackRock spooked the market. The Bitcoin price has plummeted towards 90,000 per Bitcoin, dragging to a wider crypto market lower and wiping away around 500 billion net worth of value from the 3.2 trillion crypto market. Bitcoin's drop of 10% in the last 24 hours was dwarfed by Ethereum and smaller drop 10 cryptocurrencies, including Solana, Dogecoin, that crashed back between 15 and 25%. This week, Federal Reserve Chair Jerome Powell disappointed traders when he warned interest rates would not come down as quickly as the Fed had previously thought, reducing its planned number of cuts to just 2 in 2025 from 4 previously. Comments from the Federal Reserve were a wake-up call. A.J. Bell's head of financial analysts said in an email, inflation is proving sticky, and tax cuts and tariffs could be a recipe for reflation. Risk appetite has been pared back. Trump 2.0 is a known unknown, and no one wants to be overexposed if the climate proves inhospitable. So are we headed for stagflation, Carol? Is that... is Bitcoin going to be going back? Trump really juiced the Bitcoin market when he said we're going to use it as a reserve. So tell me what you make of all this.
So a lot to make, and we could probably have a couple more shows to go through all of this in detail. But inflation is already back on the rise. We just got data out this week, and I have said for a long time that we're going to see it back on the rise. And I think Paul hopefully will agree with me, but it has nothing to do with kind of all these outliers, and it purely has to do with that math that we were talking about. Yeah. The fact that we've got 120+% debt to GDP, deficits at 7% of GDP, and that we have our fiscal house in a mess. And the reality is that they're probably going to have to print or do something that is a proxy for printing in order to absorb the deficits that we're going to have to continue to run for some time here. So I do think that we are going to have some sort of I don't know if it's going to be a stagflation, but it's going to be a sticky inflation. I do think the Trump team is focused on growth. So I do think that they're going to be pushing the growth end of it, but inflation is not going away anytime soon. I think the Fed's policy is completely irrelevant because we are in something called fiscal dominance, where the fiscal situation overtakes what the Fed is doing. So particularly after 15 years where we had zero interest rate policy or near zero interest rate policy, everybody who had massive demand for debt fulfilled that. They're not unleashing some massive demand by a 25-point basis cut. That's just not realistic. And it's up so high. I don't think that the Fed's decisions are really making a big impact on the economy. Of course, it's moving the market. As far as Bitcoin goes, and just, for complete transparency, I own a little bit of it, but I'm more of a precious metals person than I am a crypto person for various reasons. The reality is that that Donald Trump wanted to get that crypto vote, so he certainly professed his interest in it. But he has a lot of people on his team that are pro crypto, so I do think it's going to be interesting to see how they try to use that. I expect we're going to see lots of out-of-the-box proposals and maybe some really big surprises potentially over the next year, or certainly over the next several years, to try to deal with this crazy fiscal foundation that we've been left with that is completely cracked and broken, as Paul noted. So whether that involves Bitcoin, whether that involves pricing gold up, one evening with some people around the world, or some other weird thing that they do to try to get a handle on this, I do think you should expect the unexpected and, just kind of buckle up, because we're going to see a lot more volatility in the next several years. It's not going to be Trump's fault solely. It's going to be based on what's been happening for the last 18 to 20 years.
So inflation's on the rise again, and it doesn't matter if the Fed tries to cut. So they can't cut when that happens. But they've already scaled it back to 2 cuts next year. But as she said, we're in fiscal dominance, and so go ahead.
Inflation is going to be there the minute there's excessive money chasing after limited goods. And if you look back at the year 2000, there's 2 things you can track. The buying power of the dollar and the cost of goods then versus today. And the average of inflation since the year 2000, and that was mainly caused when the baby boomers quit producing. When that bubble, if you picture a snake swallowing a volleyball, that population bubble goes through our economy, which was the snake. Eventually it comes out the other side and you're deflating. So now production deflates, but costs go up because they need health care, they need Social Security, they need Medicare. Well, the economy's not producing the revenue to cover those costs. The tax base that we kick in out of checks and other contributions isn't enough to cover that, so the government has to print. Well, when they print, the money just doesn't stay cul-de-saced off in the different private parts of the economy. It swirls throughout the whole economy. It's like carpet bombing the economy with money. So inflation's been averaging about 8% a year since the year 2000. We just suddenly feel it because maybe COVID broke the bank, if you will. Biden's policies way overloaded the system that was used to the printed money, and we weren't seeing it. The Fed's calculation for inflation does not include energy or agriculture or healthcare related products. It doesn't include shelter. It doesn't include the cost of a hot water heater in your home. They look at basic things like what's the new cost of a pair of men's trousers last month versus this month. There's strange, arcane, plainly stated things in their calculation, but it has nothing to do with what consumers are actually consuming, because we eat, we go stuff, we heat, electrify. So it's a hooey number. This 2.5%, 3% number they're putting out there is not actually calculating the breadth of what our buying power is capable of. Is it growing or shrinking? So it's 8% a year is the average. And it's only going to get higher because the bills get bigger, the economy shrinks within, so they have to print more money. So inflation has always been here and it's not going away. That's one. Two, when we talk about Bitcoin, here, just for a perspective, the US dollar used to be a stable coin because it was backed by gold. It was a stable coin. It was paper. We didn't have the digital age yet, but it was a stable coin. It was just made of paper. Today, the idea is to go back to a stable coin because it unloads us from being exposed to the US dollar and central governments that print money like Europe and China and just everyone. I mean, the debt load of the governments around the planet is $303 trillion. So there's a lot of money printing going on. Why? That's what people need to look at. We can look at these symptoms but go, why? Ask the next question. So now we want to take a virtual asset that can go from 106,000 to 90,000 in 2 days, and that's going to be some war chest of finance. Just a thought. Can Bitcoin be hacked? What if China hacked our Bitcoin reserve? Now we don't have any money. You can't hack gold. I'm not necessarily saying people should only look at gold and silver. I'm just saying by comparison, it's actually real. It's actually metal. It's actually extremely hard to find. And it's also a very finite supply. No, we haven't found the last ounce yet, but it's still very finite. And when you look, at the US stock market's worth around 50 trillion, 55, 60 trillion dollars today. If that were to leg into Bitcoin, Bitcoin could be 800,000 a coin. Gold could be 80,000 an ounce. So when you look at the wealth transfer from printed money and people freaking out and worried about this erosion and eventually it all breaks and you better get out before it breaks, Bitcoin is the new zany idea for digital money, very flexible, fungible money.
It seems like a quick fix.
But what company's going to do payroll in Bitcoin?
Right.
Like, how ridiculous is this? What company is going to do payroll in Bitcoin?
Right. No. Okay.
Your check could be worth $8,000 Friday. It's worth $6,000 by Tuesday. It's worth $14,000 a week. I mean, it's just ridiculous. You're looking for stability. A central government's money needs to be stable. It can't be printed, and you can't.
Okay.
Wow.
Go ahead, Carol. You wanted to say something?
I was just gonna add, and that's why China is actually offering settlement for trade in gold currently, because people don't necessarily want their currency, but if they can say, oh, well, you can settle in gold, that makes other central banks feel all warm and cozy.
Yeah.
Okay. Well, so you don't say stagflation next year. You say there will be, but you both agree there will be inflation.
Inflation.
Yes.
But we might not have a stagnant
We already
economy.
have inflation. It's not going
We
away.
already
have. We might be able to eke out some growth. It depends how quickly they can put the policies in place, but it's possible that it's stagflation as well.
Carol, help me here, because once in a while I consider myself a smart person. You're definitely very smart. So when we look at the Fed's inflation number, they're measuring an overheating economy. They're not really measuring the cost of goods and services, right? So they're looking at how hot is the economy with that number, with their recipe for the inflation number. They're not really looking at what we're experiencing at the grocery store, right?
Well, no, I mean, we know that the inflation numbers have been, meddled with since the 1980s. And the reason why is because they have all these cost of living adjustments for things like Social Security that are tied to inflation. So if they told you what the actual inflation was, then they would have to come up with all this money that they don't have to make the cost of living adjustments. So, it's widely agreed that the standard numbers around 20+% inflation that we've seen over the last few years is at least double that. I mean, I think that everybody agrees with that.
Yeah.
So the unemployment rate is much higher than they say. The inflation rate is much higher than it's like it's a house of mirrors that they're running our economy on.
Your
100%.
earlier segment was on truckers. Go read any article. They're expected to replace all 1.7 million truckers in this country with AI, self-driving cars over the next 10 years. Technology replaces jobs permanently. And then you say to yourself, but that's so great. And there'll be all these new tech jobs out of India and Pakistan to support the AI infrastructure. How much money does AI spend in the economy?
Right, nothing.
And 70% of our economy is driven by consumer spending. So we're literally deleting our workforce to have the convenience of technology.
So I remember Tucker Carlson telling Ben Shapiro that he would outlaw self-driving trucks to save the economy. And Ben Shapiro's head almost exploded when he said that, because And I remember Tucker said, I'm a capitalist, but it's not a religion. So...
Well, you can also, to Paul's earlier point, you can only have capitalism if everybody's playing by the same rules.
Right.
If you have other people who are playing different games and are not abiding by the rules, then you have to, kind of shift up your game as well. I mean, I'm a free market capitalist, but I'm also a realist. And you have to understand that if you're playing in an arena and other people are playing a different game, that you have to shift things up.
All right. Carol Roth, the author of You Will Own Nothing. There it is. Okay, Carol, I really appreciate you coming on. And
happy holidays to you.
It's always great to see you. Happy holidays. Enjoy your Red Shoe Diary taping. And enjoy your dinner with your husband. Paul Stone from thepaulstone.substack.com. I appreciate you coming in. Thanks for your commentary. It's great to see both of you. Happy holidays. Come see us on tour in Los Angeles, Honolulu, Dallas, Texas, Baltimore, Atlantic City, Cohoes, New York, and Providence, Rhode Island. Go to jimmydore.com for a link for tickets, and only there.